Hi everyone and welcome to the channel. In this video we're going to talk about the top 10 tips to improve your investing approach to increase your profits and income. Don't forget to like, comment, share and subscribe to the channel, and these tips apply to all types of investing, including stocks and shares, Forex as well as others. So let's get started. Number 1. Have a clear strategy. This is really important and often overlooked, but it is so vital to have a plan of what you're doing, where you're going, what you're focusing on, and how you spend your time investing. It doesn't have to be complicated, and it can be very simple, especially to start off with, and beginners should definitely stick to the basics. A plan enables you to assess whether you've met your original goals in a certain time frame, which is useful because people often move the goalposts when they trade, either subconsciously or consciously. And then after a while, they can't really evaluate what they've done because they've repeatedly changed their approach. Also, having clear stop losses or take profit levels as soon as you enter a trade or purchase some stocks is key. You should change and tweak your strategy as you find out what works for you as a trader. Your plan should be individual to your trading style and flexible. Ultimately, this is going to be your strategy, so you have to own it and make sure it works for you. Number 2. Start small and scale up. When you start investing, you should test the waters before you go all in. Having a demo account is a great way to get started and learn the ropes before increasing the stakes. Once you're comfortable to invest your own money and have chosen an appropriate platform, start with a small amount. Your investing behavior will most likely change when you invest your real money, and you need to be able to not trade emotionally, which takes time and a lot of practice. It's always good to focus on percentage gains instead of actual amounts. This will help hone your technique and means you focus on the mechanisms around investing, and then you can increase your contributions in your investments when you see that you can consistently make money. Also, try not to compare your returns to the returns of others. Everyone has their own circumstances and budgets and has been at this for different lengths of time. Instead, focus on your work and what you need to do to see those gains, and then the money will come as a natural output of the process. Number 3. Know your technical analysis. You need to be able to read charts to a decent standard if you're going to make any money whilst trading. This takes time and having a solid understanding of candlestick graphs and patterns. There are a range of indicators people like to use, like moving averages, RSI, volume, and many others. These are tools people use to inform their approach, and an investor needs to know their way around these in order to make informed decisions on position entry as well as exit points. To be honest, the more you look at these charts, the more it becomes second nature, and the quicker it is to get a sense of how a stock or trade is behaving. You need to have a solid understanding of fundamentals too, and how news and company events affects prices. But technical analysis is key, and many traders are happy to trade using solely technical skills. So in a nutshell, get used to looking at these graphs, and if you can interpret them correctly, you will make a lot of money. Number 4. Bank your gains. Whenever you buy a stock or place a trade, you should have an exit point in mind. This is extremely important for scalping particularly, but it's good practice across any time frame. Sometimes when people make money off a trade, they're nervous to bank it because they think it may run higher. And the truth is that there's no right or wrong answer here. You need to see what works for you and how much risk you're willing to take. Some people are naturally more risk averse, and others are happy to see their account figures fluctuate without blinking. But the key point here is that you must bank your gains, as the aim should be to gradually build your portfolio over time and not opt for risky, high-value stock swings which can wipe out a large part of your portfolio in a single go. So the take-home message is, don't be afraid to bank those gains. There is always more opportunities for future trades in order to make money. Number 5. Have patience. When I first started trading, I used to check on my stocks all of the time. And if you have an app on your phone with your trading account on it, you can literally check it wherever you are, wherever you go. I was waiting to see a jump in price and then think whether to take it or not. Waiting is a key skill to master when trading, and you'll need to master it to be successful. Impatient traders get frustrated, and frustration leads to emotional trading, which usually always results in losses. For longer term trades, I like to take a position, set a couple of alerts at certain price levels or percentage increases, and check in on them occasionally. Some people even have different accounts for their short-term and long-term positions. Traders who have been doing this for a long time realize that stocks and the markets move when they move, and there's not much you can do about it apart from use the time to learn more about the market and assess future potential investments. Number 6. Learn everywhere from everything. When I first started trading, I mostly watched YouTube videos like this one and subscribed to a few channels which helped me greatly and gave me a good foundation to build on. But I also read various books, followed blogs and certain traders on social media, looked for news reports on particular companies and around particular events, and used websites like the FT for corporate information. The point here is that there's so many ways to learn about the market and what trading and investing entails. There really is a format for everyone to learn in a way that they want to and which suits their learning style. However, you can read as many things as you want or listen to as many podcasts as you want, but you will always find that the best teacher is experience, and without a track record of experience, all of the knowledge you read about is purely academic. The more you trade, the better you will get. It really is that simple. But you've got to put in the time and the hard work to get better. There are no shortcuts when it comes to investing or trading. Number 7. Accept that some trades will lose. Every trader has off days, weeks, or even months where they don't get great returns. This is part and parcel of trading and is usually a part of the journey. As long as overall you're gaining money in the medium to longer term, you shouldn't let it put you off. You should have a diverse portfolio if possible, particularly with stocks, so that if some sectors are negatively affected by anything, it won't affect all of your positions. Of course, you should never risk more than you're willing to lose, and sometimes you have to cut off a position if it really is not going your way. The more you research a position or a particular stock or index movement, the more confident you can be in your trades, but sometimes these things do just happen and you have to move on. When I started trading, I didn't use stop losses on a couple of trades and they absolutely tanked. I was waiting and waiting for them to come back up, but they never did, or not until I closed my positions at least. In summary, good traders know when to cut their losses and move on. Number 8. Don't overtrade. I used to do this a lot in my early days of investing. I used to set my positions and then nothing much would happen for a while, so I'd get bored and enter more positions, looking to make some quick money. This is not a good way to trade and shows impatience. You should follow your trading strategy and not take buy or sell positions just for the sake of it, or on a whim without doing any due diligence. When I realised I started to overtrade, I used that time instead to do some research into certain companies and made watch lists that I'd use to take future positions on. Some traders have a certain amount or a limit they have invested at any one time, or wouldn't have more than a select number of positions at once, so if they want to buy another position, they need to sell an existing one. And I use that quite often now. Find out what works for you and stick to it. But if you think you might be trading out of boredom, you should stop, as this will lose you money. I'm still guilty of this a little bit, but I'm definitely trying hard. Number 9. Choose a market and get experience. There are various different markets you can invest in. These include Forex, stocks and shares, commodity trading like oil and gold, but it really just depends what you want to do. I started out doing a small bit of Forex, but now I mostly do stocks and shares, which suits me better and I find more interesting. Investing is a global business and there's many hubs and districts around the world that you can take a stake in. I mostly trade US and UK stocks and shares, including larger and smaller companies on different listings like the FTSE, AIM and Nasdaq. Experienced traders sometimes dabble in a few areas, but mostly people tend to specialise in one area or another, which makes sense as the more experience you get in a particular sector or area, the more knowledge you have. And the more knowledge you have, the better informed your trades are going to be. The more experience you have, the more likely it is that you'll make money, basically. You've got to put in the time to get good at something, and this is no different. Number 10. Understand compounding. If you don't know what compounding is in the financial world, you need to understand this as soon as possible. If you use compounding correctly, it will magnify your cash returns greatly over time. I cannot overstate this. Having an understanding of compounding, which is essentially reinvesting your returns so that you make even bigger returns the next time around, and how quickly this scales your money is absolutely crucial. Without compounding, it will take you much, much longer to grow your portfolio and trading account, and that's just a fact. Even Einstein said, compound interest is the 8th wonder of the world. He who understands it, earns it. He who doesn't, pays it. So there you have it. If it's good enough for Einstein, it's good enough for me. So use it to your advantage and watch your investments grow. So there we have it, ladies and gentlemen. Those are my top tips you can use when investing or trading to increase your cash returns. Share in the comments section below any other tips or tricks you have or you use whilst trading, as well as any requests for future videos or subjects. Thank you very much for watching, best of luck with your trading, and don't forget to like and subscribe to the channel. Thank you very much, and I'll see you next time.